All right, well, let's get into some topics. What do you think?
Excellent.
You guys want to talk some real estate?
Are the bird's eye view set up?
Yeah, we're set up. You guys want to talk real estate, or should we just keep talking Justin Bieber?
Let's not.
All right, Alissa, you're going to start us off with a question that's on the minds of many. What is this 2012 MCC tax credit, and how does it affect me? And first of all, what does MCC stand for?
What does that stand for? Mortgage credit.
Mortgage credit.
Is he one of the Beastie Boys?
Mortgage credit something? Certificate.
Yeah.
Okay, so apparently there's a new 2012 MCC tax credit.
Statewide.
Woo woo.
The entire state of California. Does that include Northern? Because, they're separate.
LHFA.
Yeah.
Okay.
It's through the people who brought us CHDAP.
CHDAP.
Calhaffa.
Yeah, we got in a CHDAP.
And I know, because you can't get it because we don't do rates
From the people
anymore.
who brought you CHDAP, we now have MCC.
Correct. It's meant for first-time home buyers, and in a nutshell, what it does is it reduces the amount you owe for your federal income taxes. Okay, so
I'm out of here.
I'm going to get into it. I'm going to get into it.
I was like the dog. Who? What?
But that's in the nutshell. That's in the nutshell.
Maple. Yeah, well, can you unnutshell this? Because I have no idea what you're talking about.
We're going to crack it.
Crack this open.
Right. So the key thing here, and I get this question all the time, it's not like the tax credit that we saw in like 2008, 2009. You're not just getting a big fat.
It's not your average tax credit.
Uh-oh. Is this the biggest no-brainer in the history of mankind?
I know. That's a horrible commercial.
And we're actually not going to
You
get
guys
into
need
the
to give this thing a
nitty-gritties.
break. This is a sweet program.
Okay.
Yeah.
Sorry.
Once we understand
Sorry, Scott.
once we translate the alien form of
You're trashing it.
definition.
You're trashing
We're not
it.
trashing it. We're just trying to figure out what the hell it is.
You're not giving it a chance.
We're going to use you as an example, Eric.
Me?
Okay?
CHDAP
Yeah.
is
Sometimes we can't deal with the beautiful mind people over here.
Oh, that's right.
I can't read the codes.
And since we don't have any
Touch is
visual
a great
aids, I'm
program.
gonna keep this as
I bet it is.
general and not get into too much detail, but
Okay.
I'll try to give you a good idea.
All right, use
So,
me as an
Eric,
example.
All
I'm
right.
gonna help with this.
So what the credit does, it gives you every year when you become a homeowner, you're going to be able to deduct your mortgage interest that every year, your annual mortgage interest.
Which is
okay?
like one of the best parts of owning
one of the
a home.
best parts, and there was talk that we're going to get rid of it. That's never going to happen. But every
hope
year, that's
not.
what you get to do. Okay, so what the credit does, it allows you to take 20% of that deduction, and you can deduct that from your tax liability. Okay, so bear with me here.
I can deduct a deduction?
It's a dollar
We're
for
gonna get it,
dollar.
right.
It's a dollar for dollar deduction from what you owe in taxes.
Okay, so Eric,
Yes.
let's just say you earn $60,000. That's your taxable income.
Woohoo!
Okay, that would put you in what, like a 25% bracket?
Somewhere in
Okay,
there.
so that's
In the
15
1%.
That's 15,000. Okay.
Okay.
Take that 20% of your mortgage interest deduction
Yeah.
and subtract it from that 15,000. Okay, so what does that do? It minimizes, it reduces that taxable income that you owe, or it reduces the amount you owe.
Wow,
No,
seriously?
It doesn't reduce the taxable income.
Not the income, it reduces your tax liability.
Right.
So if my tax liability is $15,000 and 20% of my mortgage interest is
subtract
$10,000.
Let's say your W-2 withholdings from your employer
Right.
cover that $15,000, and you usually get $700 back.
Right.
Okay.
Right?
Yeah, kind of break even. kind
Okay,
of.
right. 20% of your mortgage
subtract
interest
that.
for the year is the check that you'll get at the end of the year.
You're gonna
That
get it
comes
back?
to you dollar for dollar.
Yep.
It gets back. It comes
So
back. to
all
you.
other things equal on your taxes, you're going to get a
it's a-
20% refund on your property tax?
It's a
mortgage
dollar,
interest, I'm
it's
sorry.
a dollar for dollar reduction in,
Oh, my
in
God.
your income
Now
tax
you
that
like
you
it.
owe.
Now I like
Right?
this.
There's
So
another
what this
level
helps,
there's
though-
another level that's even better to this.
Well, it helps because if you're buying a home, now you basically have more money in your pocket, right?
Well,
Because you're
here's
getting
what
that
it does.
back.
It allows you to readjust on application to readjust your gross income.
Yep.
So your gross income now increases when you're qualifying, so you qualify for more home because it allows you to factor in the fact that you're
increase.
paying less taxes.
Really?
So it increases your ability it improves your ability to qualify.
Sounds like it's making your job a little harder because now you got to really calculate a bunch of other stuff.
Yeah, we leave that to
we
the
got to do
underwriters.
math.
We leave that to the underwriters.
God, I hate math.
I knew I
No,
should have
but-
brought my helmet.
You
I'm an English major. Huh?
And me personally, I only notice.
Evan's in the house.
Making a rare appearance.
We haven't seen Evan forever.
Hop along.
I tend to not see this. It usually doesn't affect the purchasing power. It does raise the amount, but generally we have room on the debt to income ratios anyways. So this can help if you're on that borderline. This can be a little trick, so to speak, that you can use.
Here's the thing, though, is MCCs have been around forever, and quite honestly, they are complicated. It's difficult to
I didn't want to go
conceive.
to the math. Of,
Thank God.
The math is crazy.
On a college campus, that could be dangerous.
And it's difficult to explain, and it's difficult to conceive. So most people don't know about it. But the state of California just made it available. Now, in some counties, like LA County has their own, so they don't participate in the state. But every county that didn't already have a mortgage credit, an MCC program, is now eligible under the state program.
Yeah, Riverside I think is 15% versus 20%. Some counties have their own program.
Would you say this basically benefits every homeowner?
Every first-time home buyer.
Every first-time home
buyer.
But
here's another cool part about this is it's in force for the life of the loan. So you can take that tax deduction for 30 years. Even if you refinance, you can still use it.
Who's supposed to tell people about this?
We just did.
Yeah, I know, because we rock, and that's what we do here, and we inform the consumers.
You didn't get the email?
Who's supposed to tell people about this?
I don't understand why all these fantastic programs and angles and all this stuff is available, and it's never widely known or marketed.
Don't tell anybody, but they can get it.
Well, because it's hard, Frank. You have to keep up with everything. So people don't do it.
Honestly, on average, there's about 30 guideline changes every month. There's about 30 guideline changes. Most of them, no, I'm serious.
That's one a day.
I'm not even exaggerating. I'm not
That's why I'm
exaggerating.
laughing,
people don't realize that, and it's a lot of reading, but you got to do it. Most of them really don't affect you on a daily basis.
Got to keep a spreadsheet.
I have worked with 36 or more mortgage people, and I swear to God, nobody tells me as much stuff as you guys do. Nobody says as much as you guys tell me.
Yeah, so the key thing is, how do I qualify? Talk to
your mortgage person,
lender,
and if they don't know, you're fired.
They have to be, and it's not okay. It's okay.
They have to be qualified to offer.
You have to be approved
FA
lender.
Programs. Yeah.
Oh, that's a special.
Have to be CalHFA approved.
Okay.
So
break it down. Basically, increase. If you're a buyer, first-time home buyer, you're able to increase your purchasing power and reduce the amount of taxes you owe by using this mortgage. And maybe get a fat check back.
Get fat check back.
God, I like that. That's
you know
awesome.
what you should do with that fat check? Put it towards the principal of your balance. Dun, dun, dun.
Whoa.
And save even more money.
Uh-oh. I didn't have the volume up when I hit it. Sorry.
Oh, my God. 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 See, and you thought that wasn't going to be a good topic.
No, that was a great topic. I thought it was going to bore me to death. I was ready to take a nap, but that was awesome because I'm going to get a fat check back.
My brain hurts.
I totally had you in
Your
mind,
brain always hurts.
Yes.
Well, you had me at hello.